Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay.
Hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? All right, guys. So, I went ahead and I created this meme because I really thought it was very funny because it's like, this is Clove Investors in 2021. Everyone's excited. And we just basically got chamath by playing in the arena. And now we're serious investors. We are warriors now. Nothing can faze us, right? I thought this was kind of funny. And obviously this is, Jim Cramer saying, I just don't want to hurt anybody, right? I just don't want to hurt anybody. And he's dressed up in these suits because, these people are definitely hurting people for sure. Well, all right, guys, I hope that you got a laugh out of this. In this video, we're going to talk about a few things here. Where the hell is the bull run? So, Cam, let me show you something. Okay. This is called stage analysis. Okay. Usually retail investors like to buy stocks when they're here, and then they basically fall down and they lose their money. Okay. Anything above the 200-day moving average is pretty good, right? I think we're in the early stage now. Let me explain. Whoops, sorry. So this is 2008, right? This is the great financial crisis, right? Let me go ahead and remove myself here. Let me remove this comment. So you can see now, if you go all the way down, this is 2007. You can see 08 is right over here. So you can see the red line is a 200-day moving average. You can see we went below that, right? As soon as we went below that, this is when we started getting that top here, which is basically stage 3, right? And then we got that stage 4, which is above that 30-week MA, which is another way of saying 200-day, right? So we went ahead, it dipped, and you can calculate the average dip to trough here, and then you could calculate the averages of all the recessions, and that's what exactly money managers and hedge funds do. But we started getting up here, and then basically 2009 was the start of this bull market. We got some fake outs here, which I like to call corrections. And then we just basically go up again. And this is 2010. Then in 2011, you got another correction. Corrections were happening pretty frequently because, again, the great financial crisis happened. But again, then all of a sudden, the market just basically started formulating above the 50-day moving average, which is in the yellow. You got some corrections to that 200-day, but never to that stage 3 going to stage 4 below the 200-day. And then you basically started going above, and then getting down to that 200-day back in 2014. It has to, in regards to the Feds, you can look at the history. And also the Mastering Stock Market course, we have a simulator where you can play around with this to figure out how rates affect the overall S&P. But all of a sudden you go down here, and then 2015 happened, and then all of a sudden we're back above the yellow, and then we're getting into this crazy bull market cycle. And then we get all the way up here until we get that 2018. Then the Chinese stocks fell and American stocks fell, right? Rebounded over the 200-day. And we go all the way here to this thing. Sorry, this was 2018. It goes, you got two 2018 falls. Then you got a really bad fall. But then again, it was recovered really quickly within a couple of months, like less than 2 months. It recovered, and we went back to the bull market. But then we got the forced reduced recession, which is 2020 pandemic. And this was the pandemic. You can see how low it was here, the MACD. Then all of a sudden went down all the way low here. You see this KM, right? And then now we got this whole rebound, and we got this crazy bull market. Hold on. Give me a second first. Sorry about that. All right. So then we got this basically rebound here, and then we got above the yellow moving average here. Okay. And then all of a sudden now in 2021, we got the bear market, right? So this is not a correction. This is a bear market, right? The bear market came, and just hold on, guys. One second. Hold on. Sorry, guys. All right, I'm back. All right, so then you got that bear market here, okay? And then ultimately the bear market lasted about, as typical as a bear market lasts, and then it basically recovered. And then now we started to get over that 200-day. I mean, a good time for recovery was around 2023. But again, people were very bearish in 2023. In fact, it was near October 2023 or 2022. I said small caps have rebounded, but then we covered, and we went ahead and touched this here in November. And then from then onwards, we've been, again, this whole thing has been a bull market, but then this bull market really started continuing. So since we're above the 50-day, you can see there's a bull market, right? See this? So the goal now is, what do we do? Do we get a correction down here, back to this here, and then we rebound back up? And we're going to continue doing it a little bit and then rebound back to this red line. So when you say, where the hell is the bull run? We're actually in the bull. We're actually in the bull run, right? So again, this is just a little bit some education here, right? I hope that basically helps. Again, sometimes, I get it. You go on CNBC, they don't explain it like this because they don't want you to know this information. They don't want you to know this information. They want you to be retail and dumb money investors. Okay, so the question now, the next 18 months, when are we going to hit this red line again, right? So now the question is, let's say, how's Clover doing, right? Well, if you go ahead and look at Clover, and then don't mind the scribbles here, but you could just this was looking at a breakout pattern. So look, we could just eliminate. Let's just delete this if we can. We could delete those, right? So Clover's been below its red line, so it's just it's historically, it never really had a hard time. It's always had a hard time staying above the red line 200-day. So it's been below, and then all of a sudden here, we were slamming the table saying, hey, this thing's going to go. And then it went ahead and popped. And now finally it's popping above the red and the gold line, the 50-day and the 200-day. So all of a sudden now we go all the way up here, and it's been essentially, now it's kind of fighting that 50-day, and it's consolidating. And the whole point is now is, the red line here around is it $2.19. That's the essentially 200-day simple moving average. The thing is, we got Vivek buying right around here at around $1.80. That triggered that crazies, and then we went from 250 to 3 plus because of the CMS 4-star rating. So the question now is, when are we going to probably retest this down here? I think we need a couple of more days for this 200-day simple moving average and the 50-day to recover upwards by deleting the last bit of it, right? So in terms of bull run, I don't know kind of what is your average for the past 5 years, but having a year to date of 232%, that's actually pretty good, right? That's actually pretty good, right? So again, that's kind of, and a lot of us have this type of gain because we dollar cost averaged, because we had conviction and we knew what we held, and we dollar cost average to a point where now our average is actually below $1 and below $1.50 or whatever. So we really reap the benefits because we dollar cost average, because we weren't sissies, right? So okay, so it's funny to say that. So there's that. Happy New Year. Let's go to Vegas. Thumbs up. What's up, Reby Rad Cooley? What's going on? If you are not buying, you will be crying, and I'm not lying. And I haven't shed a tear in a year. Happy New Year. What's going on? What's going on? Is that a rhyme? What's going on? Small caps. Yeah. So we're going to talk about that research. So Happy New Year. My thoughts was Kramer didn't want to hurt retail with his thoughts, which would have helped us because he's always wrong. That's so funny. No, I mean, I think he's talking about the big dogs, right? The big dogs. Bull market. Thank you, Al, for the info. Excellent. Right? So yeah. So I mean, I pretty much basically summarized the whole chapter for you. I mean, I pretty much summarized a half of a book for you right now. And again, that's the power of our platform. Now, again, if you think that, let's say, for example, oh, this is great, I can get a lot of information out of the YouTube channel. Yes, you can. But here's the thing. Imagine what you can get out of the 2.5 billion outputs of institutionally graded data, our research edge, and our amazing community of like-minded investors that has a overall net worth of over $55.3 million. I mean, it shows you that we're about to have $1 billion net worth in the next 10 years as a group, as a collective. And we're going to end up closing off the group because I think it's honestly better for us just to keep things in the noise down. Because we don't want to get the wrong people in. We are going to be raising the prices so we can, again, we have enough information online to have people say, you know what, I want to do what Al did. So I'm going to go ahead and read The Intelligent Investor. And I'm going to it is going to take you 5 to 10 years. But we showed you that this works. Now, do you need a platform? Do you need the data? Yes, you do. And that's why we'll always have that subscription open for you. But in terms of lifetime access, we want people that are like-minded, because these are going to be our group members. We're going to be we're going to be setting up philanthropy. We're going to be doing a lot of cool things in this group. So again, this offer is going to be ending. So I would definitely take advantage of this New Year sale, $700 lifetime access, coupon code New Year. It'll be expiring soon. Prices will be increasing. So definitely, right here, right? Leave it open, raise the price. Wrong people won't join. The thing, Shant, is it's too much of a risk, right? Because lifetime means lifetime, right? And I'm a free speech person, so I can't really, it's lifetime. We'll raise the price and we'll keep it open. We'll definitely consider that, but we also want to keep it a really exclusive group. We'll have the subscriptions, right? But for lifetime, again, you guys know you guys know my holdings. You guys know kind of where where I'm at. This is not, it's not, your typical YouTuber that, let's make some money off of the subscribers. All money that's taken is reinvested back into all stock trades, and to manage the data, because the data is expensive, especially Brain Machine. That data is really expensive. And if, everything that we have, it's really, in all the research that we do in the Research Edge, that's very expensive. So all it gets reinvested back into the research. But ultimately, once we get through a threshold where we can basically be active for the next 30 years self-sufficient, we're pretty much, I think, just closing it off, just keeping it closed. I know that sucks, but again, this is a once in a lifetime opportunity that we're trying to create, and you can basically see it from our call outs with Palantir at $6.55. We're going to make a video on Palantir soon, SoundHound, et cetera, right, Clover? So I do agree with you. It's just it gets scary, right? Because if we keep it, because this, Clover's going to bounce, right? And the problem is when Clover bounces, we're going to have a lot of people join. And I got to be careful, because we're going to get the wrong people to join. We're going to get people that want to gamble, and we're going to get people that want to gamble, and it sucks. The issue with the monthly Discord is that you need the data, right? And we do want to democratize financial literacy. We don't want to close it off completely, but lifetime, that's tough, right? Again, there's a lot of thinking I have to do with this, but I do love the group we have. We have a lot of amazing people, and I just don't want to screw it up, right? We have such a great group, but when this thing takes off, you're gonna get you're gonna get people. You're like, oh, I want to get in, and it's gonna be the people that want it 10x in like 5 days, and that's not the people we're looking for, right? We're looking for folks that want to join this community, almost like they're trying to, take care of a farm, like Warren Buffett said. Farms take a while for the crops to grow. I mean, sometimes farmers have to burn the soil and then reintroduce, nutrition. And that it takes a year for the soil to even heal in order for it to grow. And that's those are like your corrections and bear markets, right? So ultimately, guys, it's just, I have a lot of thinking to do, because we're all going to be, we already have $55.3 million of net worth in the group. We have enough to essentially, enough brain power now, to circulate and search the whole market for opportunities for the next 10 to 30 years. That's why I say it is it is a big thing. If you want to invest in yourself, I don't know what to do. I mean, that's the thing. Ultimately, at the end of the day, this is an investment, and you guys now see it, right? But again, we're open right now to bring people in, and that's ultimately what it is. We give back by teaching what we learn to those open and willing to. Yeah, exactly. And Kevin, you're in there and you see it, right? It's a very clean group. We work together. We have fun. We laugh. And again, it's just so dangerous because we don't want to lose that, right? We have such a great team here, right? And we definitely, there are ways to traffic it out, to open up an OG channel, to have that, and then if we have it's hard because we want people that, look at the testimonials that we have on our Al Stock Trades. One of them is from Irish Vanity. He was saying it. The people like to come to our channel, our stock terminal. They like to read. They like to invest in themselves. They like to learn. We don't have a problem with spending 12 hours listening to an audiobook driving about investing. That's the type of people. we're hungry, right? So that's the culture that we built. We want to lose the culture. So that's why the prices are going to increase, because because as our stock picks publicly increase, people are going to have more money. And the problem is we don't want the wrong people. Right, we do not want the wrong people. The data is expensive, and we don't want that, right? So, all right, so now Clover is down today. Well, it used to be up, now it just went down. And then if you look at the overall market right now, Russell and everything's up. The S&P is down. So we're honestly tracking the market right now pretty good. So I would say it's in terms of the Christmas rally for the month of December, I think it's definitely faltered, and it's slowed down, but that doesn't mean that January won't be good. In fact, we'll be talking about that in today's research. Okay. So The reason why stocks have been down is because the 10-year has been up, given the remarks of the Federal Reserve regarding anticipating Trump's tariffs and influencing federal policy. The problem is, if you don't recall, Federal Chairman Jerome Powell stating that the FOMC committee is data driven. I just want to understand, what data point did they get from Trump that can sufficiently be added to their mathematical modeling sequence to equate to an increase in the overall inflation rate? Which the answer is, if you speak to anybody on Wall Street, they would basically say, no, this is a complete misdirection of the Fed, which will be bullish, especially when you get into 2025, when the expectations change, right? Exactly. So, we've been saying small caps are going to be outperforming before even Tom Lee was saying it. And you can find it, I believe, in our video. You can see small caps. Here it is. So we made this video, and again, sadly, we don't get a lot of views, but it's okay because the right people will watch our channel. We want to basically directly find our audience, and we have to look for those people that want to learn. There's not a lot of us out there, but again, that's just the beauty of it. So we talked about small caps set to explode. Now, the thing is, I want to know is, when did we call this out? Small caps. Here we have small caps. We've talked small caps. It's happening because I want older video. I don't know if I can find. Again, I can't for some reason. It's all scrambled. Here's 4 months. Here's 9 months. Usually, when you go down, you should get a video that's older. But again, this is YouTube, so it's not even. I don't even know what's going on anymore. I'm just pressing all these things. It's just like, what the hell's happening? Yeah. So here's 4 months, and here's Tom Lee saying. So Tom Lee started talking about it. But if you look at us, we have an older video in 2022. We have an older video in 2022, but this is October 30th, 2023. So and then we're talking about small caps are about to explode. You go to IWM stock and you go in and you go October 2023. It's right here, right? It's October 2027. You can see how we called it out right at the bottom, right? And again, our calls are pretty legit, right? You know what I mean? Even before Tom Lee, which is great. I mean, I'm happy Tom Lee joined it, right? But it's good. But I just want to say that we did it first, and I'm very excited because we don't have the resources that he has. Of course, he used to be the chief officer in JP Morgan, but hey, people in medicine, we have the fire brain power to be able to, compete with the big dogs, right? And again, the mission's the same. He likes to democratize research as well. So we talked about this. Now, let me go ahead and just strictly talk about this one here, right? Clover lift off when there's good news and volume. Absolutely, right? I mean, right? Isn't that for any stock, right? So this is an analysis that we did on Reddit. I got some pushback, and I agree with you. Like, when the hell are we looking at social media likes and posts of a CEO to equate to bullishness? Like, that's just pure speculation, which it is. But what I did is, for this analysis, we analyzed a couple of posts from Andrew Toy, and we looked at the people that liked his post, and we went ahead and analyzed the overall businesses that they come from. Now, the reason why we did this, and I just, hold on, I just want to basically show you this so we can, have a good analysis to explain to you kind of what's in my head. Let me think. To give you, kind of what's in my brain here, because, sometimes it's hard to explain without pictures. So let me just go ahead and upload this picture, which you've guys seen before. These are all of the Medicare Advantage companies that are in the top sector that are publicly traded on are in that market of managed care. And you can see United Healthcare lost $106 billion this year. ELV, Elevance Healthcare, I'm going to just call it ELV from now, lost $43 billion. Cigna lost 25 billion. CVS lost 85 billion. Humana lost 39 billion. Centene lost 24 billion, all totaling $326 billion leaving. So the question now, where is it going to find its home? Now, if you don't recall, this year, which we've predicted for a long time, Clover Health announced that they have activated their SaaS subscription as a service, which then ultimately is equates to and demands a higher price to sales once they once they rebrand themselves as an AI, which they already are. People are telling now on podcasts, people are referring to them as an AI software company. The reason why I say this is because I wanted to know, I wanted to know who is liking Andrew Toy's post, because those can be potential contracts with Counterpart Assistant with their SaaS. So I see CVS like this post, so he's connected to CVS, of course. I see Caroline, which is Carelon, whatever it is, which is another company. I see Blue Cross of North Carolina, but also I see this big behemoth, ELV, Elevance Health, which, if you don't know, as I just told you, this thing used to be $130 billion market cap. It now is an $86 billion market cap. It lost $43 billion in market cap. They are financially hemorrhaging because they need help, because, like anything, they're down a lot, right? And if you look at them to the peak here, they're down, guys, 33.87%. I mean, it does not look beautiful for them. It looks really bad for them, guys. So the point is they're liking Andrew Toy's post. And this is interesting because this might be a future contract. I mean, we are potentially seeing the setups of these social media. I mean, this is Blue Cross and Blue Shield of Kansas City. I mean, we're getting a lot of folks. We're even getting managed care, different types of groups here that invests in healthcare technology that are disruptive, like Clover. The point is, I did this analysis to see, who is Andrew Toy's overall overall connection here. And obviously, if these people were haters, they wouldn't be liking the post. So obviously they have some form of a connection. And the fact that these companies know about Clover, and especially, this is a big one here. This one's a behemoth, right? This one's bigger than Humana. So I'm very bullish because now overall, everyone knows the little small guy on the block in New Jersey is a 4-star plan now, right? And they have this data, and now everyone is going to basically rush to it. And then we are the beneficiaries because we invested in this company early on. And we got prices below Chamath's price of when he got after the primary capital raise dilution of $5.75. We got at that level. I mean, Chamath ended up selling his SoFi in the 20s to buy Clover in the 5s. And we were able to buy in the 60 cent, which is incredible. So we're like literally sitting beautifully right now because we did our work. We did our homework. Okay. All right. So now we talked about this. So again, if you look at the Seeking Alpha Quant ranking system, Clover Health is ranked 1 in the industry. What is the industry? Right here. So here's Clove here in number 1. Here's Alignment Healthcare. Here's Molina, which is, again, the board of Clover Health's ex-CFO is on our board. So this could be a potential contract for the Counterpart Assistant, which we've already seen Iowa Clinic, who's lady is also on the board of Clover in terms of a leadership position. So this might also play out. We have the behemoth United Healthcare. We have Health Equity. We have Centene, Humana. Again, the ELV, that big company I told you about, that is liking Andrew Toy's post, which you can basically see here. This is why I did it. Yes, I do not factor social media likes in my analysis. I do an intrinsic value calculation. I'm just trying to see and answer a question: are these big companies talking to Clover in a way? And yes, they are. Now, again, they went ahead and liked this post. So I hope you understand what I'm saying. But overall, if you look at all the stocks, it's ranked 20 out of 4,389 stocks. And let me just show you one of the stocks that they have, just to show you how much it went up, is this. And we called that stock out too. We also called out this stock as well way long ago. And look at it, it's up 16 baggers. It used to be up 17 baggers. So the thing is, our platform works, our research is strong, And we're basically democratizing what they do on Wall Street and showing you these types of returns that they never even show you, because they want you just making that 8% per year, even if you're lucky, which they don't even want you to make that, right? So overall, I'm very excited with this quant system. It's getting a lot of noise, and it's pretty good. So if you look at the Clover Health sentiment, so we did another analysis and we analyzed all of the articles in regards to Clover. Any article online that you saw, we went ahead and put it to our computational model. This is why I said that our stock trades, that it's going to be expensive, because ultimately we're going to be running these as a stock terminal command in the future. It'll just take time for the quantitative system. But ultimately, it shows you how this is the neutral rate and this is the negative rate, bears, and this is the bull. And you could see ultimately, you could see by July, you could see it took off. You could see it just broke out of that sequence for the first time ever. And that basically started to go up. And if you were to follow from essentially July onwards and look at Clover, just look at July. Where's July? July is over here. And July onwards, you can see ultimately the stock took off. So you can see there's some quantitative modeling with the stock price here, which shows you that this analysis is definitely statistically significant if your significance is making a lot of freaking money. Okay. So there it is there. And again, it keeps going up. So again, this whole dip, in my opinion, is an opportunity. I would say, again, not financial advice. This is just my opinion. I'm not a financial advisor, broker, or whatever. I'm just a guy who likes to teach, and I have I have no credentials. I just have my experience, and I'm just sharing. So take it as a grain of salt. We have a beautiful data program, a platform that I use to make money, and I'm sharing this with you all for folks that want to join. It is expensive. I wish we can do it for free, but unfortunately, this data is a lot of money. You could go ahead and do it on your own and pay $2,000 a month and get a Bloomberg terminal, which is right here. Bloomberg terminal cost, which is $31,000 per year for a single user. So you take $31,000 per year, you go in and divide that by 12, you pay $2,600, $2,665. You could do it your way, but we like to democratize it and make it a lot affordable, right? All right. So ultimately, lifetime access will get to these prices, especially because it's going to make sense, especially when we have $1 billion in net worth altogether in the platform, right? All right. So where are we here? So I think there is some profit taking, especially in the market, in terms of the S&P, there's some profit taking, but we're going to go ahead and continue with our analysis so we can be clear. So let me take a little breath here and let's look at the comments real quick. Let me just drink some coffee. All right. So Happy New Year. A lot of money going to go to small caps. I agree with Jamal said in the pod about a month after Clove states that they have SaaS, that what SaaS company has ever made money. He's hating on Clove. Well, I mean, he did lose money, so, and he did all the work to put it public. Exactly. Well, that's what I'm saying. They already have the concept. I mean, isn't that beautiful? All right. So, this looks at the S&P 500 over the 200-day simple moving average. You can see that we've faltered and now we're rebounding. We are below average when it comes to the overall breadth of the market. If you go, a lot of people are bearish now because the breadth is low. Breadth is like, just think of it as the amount of energy to lift up stocks, like in terms of momentum. We're struggling more than we are normally. If you look at the overall expectation of the 200-day moving breadth, we're literally low right now. But if you look at this and look at the overall analysis, in the week or two, we should be down, but overall in a month after, we should be up. So we're going to have probably in the next 6 months are going to look pretty sexy. The reason why I say 6 months, before I even say that, let's go ahead and divide this out by small caps. You can see small caps here. You could see that we're going to make, I think this year may be the year for small caps, and it's going to look pretty sexy, right? I think the year of small caps are going to outperform large caps, which you can basically see in this direction, which is exactly kind of what we're talking about here in terms of a lot of money going to go into small caps here. And as well regarding Tom Lee, again, the whole goal is to democratize, right? So you could see this here, okay? And now ultimately, if you go ahead and fix this and go ahead and record it to what's happening, you can see the first 6 months, we're going to be positive, but then the last bit of it, then we might get a correction. That goes back to our original outlook. You know what I mean? So There it is. But yeah, so that's kind of the walk around here in terms of the data. But yeah, guys, I think that is what I have for you guys. Happy New Year to all of you. Enjoy it. For folks that have joined our lifetime access in the past 48 hours, 72 hours, congratulations. Only a couple of you have, I think just, yeah, a couple have just connected to the stock terminal integration. Guys, listen, connect to the stock terminal integration. I mean, you guys bought it, right? You have lifetime access. Congratulations. Welcome to the family. We have issued some of the options wheel strategy that the options that I'm doing on the FU money side, which I'm just basically printing cash. I'm printing anywhere between 3 to 10% per month compounded. So if I'm doing, let's say, like 5% this month, then if I do another 5% next month, that's 10% in literally 2 months, which is a lot, right? So on average, if this continues, we could do anywhere between 45 to 80% for a year, and that's just FU money side. And if the stock remains stagnant, that's good for me. Again, I make money when it goes up. I make money when it goes down. I make money when it goes sideways. Preferably, I love to go sideways because why not collect that, right? But yeah, so that's what we're issuing on our stock terminal. Whenever we do an options call out, we send those. Again, these are trackers, so you can track kind of what I'm doing, but there's just treat them as educational opportunities. They are not financial advice whatsoever. Just, hey, what is this guy doing with the data that he has on the platform? And you guys can ask me questions. We have a questions tab. You can ask me questions. Again, it's all in there, and the goal is to create a vibrant community. That's why we don't want to get it too big, because then I want to be able to answer questions of these folks. So that's kind of what it is there, and it's a one lifetime access because this is a membership, and we're gonna have exclusive get-togethers and parties what I'm trying to plan. So I just want to be able to create a community of like-minded people. So that's all it is. There it is, guys. Have a safe and happy holiday. May we be blessed again in the coming year. Absolutely. God bless you all. And yeah, I'm very excited. I'll see you on the next one.